Ladies and gentlemen, on behalf of IFAD and Heifer International, I welcome you all to this side event titled Climate Finance and Technology Opportunities for Youth at the AGRF 2022 Summit with the theme Grow, Nourish, Reward, Bold Actions for Resilient Food Systems. My name is Nandri Unito and I'm the moderator for today's event. The climate crisis is a ticking time bomb globally, but more for Africa, threatening all areas of life. The data we have tells a chilling story that should make everyone take action. Africa, despite its low contribution to greenhouse gas emissions, remains the most vulnerable continent. 7 of the 10 countries that are most vulnerable to climate change are in Africa. And this has resulted in what we see every day: bursting riverbanks, tropical storms that result in floods, landslides, damages to homes and public infrastructure, and even deaths. We see about 46 million people not having access to enough food in the Horn of Africa and the Sahel region. And the reason for this, the region is drying up. Almost 250 million Africans will face water scarcity by 2025. If no action is taken, climate impact in Africa would lead to overall yield reduction of up to 30% by 2050. While extreme weather events will result in higher post-harvest quality and quantity losses. Smallholder farmers, as we all know, are mostly at the receiving end of the climate change impact. Nevertheless, climate change also provides opportunities for the continent. For instance, a recent report by Future Market Insights, the global climate tech market is estimated in 2022 to be $16.9 billion. And this is projected to reach $147 billion by 2032. We need to tap into this market. Africa needs to turn climate change challenges into green entrepreneurial and employment opportunities for the teeming youth population in Africa. We're going to be having a panel session today, and the objective of this panel session is to highlight key lessons learned, showcasing best innovations on the continent, highlighting challenges and opportunity for climate finance investment, and climate smart technology for young people. We'll also be exploring climate change mitigation and adaptation for smallholder farmers. And what is this cost of adaptation? Who should bear this cost? This is all we'll be exploring today at the panel session. We'll also highlight the role and importance of climate smart technologies for climate adaptation and smallholder farmer resilience. So, on that note, I'd like to welcome everyone again to this session, and I wish us all a fruitful deliberation. But to open up this session formally, I would like to introduce the ESA Regional Director for her opening speech. And in introducing her, I would like to read her bio. Ms. Sarah Mbago Mbunu, Director, IFAD East and Southern Africa Division. Her work experience spans more than 20 years in the agricultural sector across Central, East, and Southern Africa. She has worked on agriculture policy and sector reviews, value chain development, access to agricultural finance, social enterprise models, and the promotion of small and medium enterprises in peri-urban and rural areas. She has also led and managed teams in other development organizations in the design of development projects and capacity building programs. Prior to IFAD, Sarah worked at the World Bank as a senior agricultural economist for the Central Africa region, the Democratic Republic of Congo, and the Republic of Congo based in Kinshasa. She has also served as the country director for SNV Netherlands Development Organization in the Democratic Republic of Congo. Please, can we welcome her on stage for her keynote address? We can do better than that. Thank you. You're welcome, Sarah.
Thank you very much, dear moderator. Now I'm at the disadvantage, and all of you know me very well. I don't know you, but I hope being here in person in Kigali in this very fresh midday, we'll get an opportunity to exchange. So it is really my privilege and pleasure to join you this morning for a very insightful discussion. I hope it will be very interesting, themed around climate finance and technology opportunities for youth, co-organized by the International Fund for Agricultural Development and Heifer International. So as we've heard, and it was really important theme setting there that has just come across, young people make the largest proportion of the population in Africa. We know this. Those aged between 15 and 25 represent more than 60% of the continent's total population. This is from the SOFI report 2020. The challenges facing African youth in their search for decent work are substantial. Cannot underestimate that. It has been argued that for the most African young people, the main issue is access to decent quality employment rather than absence of work. So some of them are working, but what's the quality of those jobs? And certainly the quality and appropriateness of education and training can be improved, and this will continue to bring substantial benefits, as has been seen over the last 2 decades. However, the approaches that overly rely on supply-side interventions, and which often dominate the youth employment policy debate in Africa, cannot resolve these challenges on their own. It is a balanced demand and supply-side interventions that are required. So somewhere, the policy interventions have not been exactly right. And we know that youth population accounts for the sizable share and depend heavily on agriculture. So agriculture is a sector that offers opportunities. But as we just heard, the impacts of climate change on agriculture is threatening our food systems, and thus making young people active in the sector even more vulnerable, young women and youth. So we just heard all about the climate shocks, the underlying drought, the increased pest infestations, the flood, the heat stress, the fires, rising sea level, among others, which are expected to become more frequent and intense unless adaptation and mitigation are incorporated meaningfully and quickly into development policies and investments. We already see in the Sahel, 12.8 million are internally displaced due to conflict and also exacerbated by the climate change. In the Horn of Africa, we are seeing an ongoing famine, which has actually translated in the loss of 7 million livestock even as we speak. So climate change is not something in the distant future, it's actually taking place and impacting on lives now. And very recently, we also saw in the Mount Elgon area, Uganda-Kenya border, that there is landslides and flooding. So this is very urgent, it is current, it is now. And we're seeing that established farming systems are unable to cope. And climate policy should acknowledge the voice and exceptional climate leadership capabilities of young farmers within the region, because young people have actually been raising this issue. Adaptive capacity for young entrepreneurs is further constrained by barriers to access to land, credit, skills, technologies, mentorship, and insurance that young people face persistently. There are really high barriers to entry to these services. And we see these as IFAD, these challenges on a daily basis through our operations. Youth employment can be promoted by focusing on the agricultural sector, and enterprises are best able to create productive wage and salary jobs. In turn, is also the need to not focus on the traditional small-scale subsistence farming. That's not where the investments need to go. This is not to discount the importance of agriculture, but on the contrary, investments in the agricultural production are essential for structural transformation of our food system. Rather, the issue is quality. What type of investments are we crowding in? And this goes to all actors in the sector trying to promote youth-based enterprises, from a sustainability perspective, but also from a viability perspective. Only 7% of current innovations and investment focus on environmental and social returns now on the continent, only 7%. And these investments tend not to reach young, small-scale farmers, and they don't necessarily focus on supporting the transition from subsistence to commercial small-scale farming, which is sustainable. And the objective should be to increase competitiveness and really absorb farming units that can absorb agriculture services and even non-farm labor. This is what we should be trying to do in support of the structural transition. Commercial agriculture offers huge opportunities for African youth. The Africa Continental Free Trade Area, with shorter local, national, regional supply chains, and with the regoverning of our markets, should offer and unlock literally 3.4 trillion in terms of value. And we know that if it is successfully connect over 1.3 million people and potentially lift 30 million people out of poverty or living lower than $5 a day. So this is really the potential that is there. And how do we get there? How do we move from where we are into that? So my bid here to you today in setting the scene for the panelists and listening to the experiences that they're going to talk about is to really talk about how to tap the potential of African youth through much needed adapted climate smart agricultural technologies, which are high yielding, access to irrigation, to machinery. How do we get them to progressively shift and enter into higher value added subsectors? How do they get into the supply and distribution chains, agro-processing, storage, and wider food enterprises? So this is all both off-farm and on-farm investment which is needed. So we have some examples, and I'm very excited to say that some of the programs, for instance, supported by the Rwanda Climate Resilient Post-Harvest and Agribusiness Support Project here in Rwanda, financed by IFAD, has Grace Mukamana, as a rural farmer, now able to access climate information. She's been able now to actually know when she can plant her beans because she has access to an SMS message that can actually tell her when it will rain and when the shortage of rainfall is expected. The daily weather information and training that she receives through her SMS weather information has helped Grace to choose the right seeds, plan her agricultural activities in advance, and invest in crop insurance when drought strikes. So IFAD is already supporting those types of schemes in this context. It's great to see young Africans like our panel member, Kaboena Fropong, and I think you'll hear from him later, committed to fighting climate change through his work at Ignitea, a technology company that provides highly accurate, hyper-local weather forecasts in West Africa and advisory services to farmers and agribusiness alike across the tropical belt. So those are the types of examples we want to see today. For the various profiles of young agripreneurs, we should be offering a menu of tailored support focused on market-driven production and on labor-competitive skill sets. This is what we would really like to do. In January 2020, which is quite recent and during the height of COVID, IFAD launched the Youth Agribusiness Hubs program to develop integrated approaches to improve access to finance, land and markets to cater to the needs of aspiring and budding rural youth. IFAD recently invested in this hub because we saw that there was need for a diversified pathway. So both wage and self-employment are key parts of the hub. And then we also support enterprise development, skills development, employment services, and investment promotion. The initiative aims to generate 22,550 jobs for young people in 9 African countries: Algeria, Nigeria, Cameroon, Malawi, Mozambique, Madagascar, Rwanda, Kenya, and Ivory Coast. Dieudonné, who has joined us here, is one of our panel members. He's a beneficiary from the Agribusiness Hub program in Rwanda. The program, as I understand it, provided him with a comprehensive and tailored package of knowledge, skills, and financial and input support, which is helping him to scale up his business and address climate risks. I'm sure we'll hear more about his experiences in this context. And I am just here to call for new financing mechanisms are needed to scale up the resources at country level, break silos, and government and public-private financial organizations also need to join hands in developing innovative financing mechanism. If well targeted, it has really the potential to tap in and allow young people to break the artificial barriers that they face today in tapping into the market opportunities that are across this continent. So in closing, I have one or two points I just want to stress. A structural transformation is definitely needed. A core element of this is gradual transfer of labor from low-paying, unproductive occupations into productive, decent wage jobs. We cannot say more about that. There needs to be a shift to wage employment by promoting sustainable youth entrepreneurship. Commercial farm services, mechanization, off-farm employment in processing, supply chains, transport, and food businesses offers options for viable jobs. These ought to be boosted by all interveners, and enhancing the quality of apprenticeship, upgrading informal apprenticeship, and increasing other types of work-based learning programs can boost the employability of youth by providing practical work experiences and skills required by the labor market. And I think I cannot overemphasize the importance of reforming the TVET vocational training systems right across the continent to be able to provide these much needed services. So I just want to end by citing one or two other programs. There's an IFAD is an assembler of development finance. We accredited to the Green Climate Fund, to Jeff Adaptation Fund and other financing. And what we are looking for is strategic partnerships that are going to unlock solutions for promoting rural youth. I'll end here by saying that young people play a crucial role in different parts of the food system, not only in farming, but also in food processing, manufacturers, logistics, trade, and retail. And youth play an essential role in agriculture innovation, as they are often eager to try out new things. So we need to create the opportunities and shorten the landscape and the barriers that they are facing. So with those few words, I wish you all a very exciting panel discussion. Thank you very much.
Thank you so much, Sarah, for those insights. And we're going to move straight into the panel session. I'll be calling on the panelists, and they'll be invited to sit up there. I'm going to start with Pathe, who's the Lead Regional Environment and Climate Specialist for West and Central Africa, IFAD, to come on stage. Can we give him a round of applause? As a quick introduction, he's an agricultural engineer by training and a climate and environmental expert. He's currently the lead for environment and climate for West and Central Africa at IFAD. In this role, he leads climate finance resource mobilization and oversees the largest IFAD's environmental and climate finance portfolio. Can we give him a round of applause again? The next person I'll be calling is Kwabena. Kwabena is the Regional Director for Africa at Ignitia, a technology company that provides highly accurate, hyperlocal weather forecasts and advisory services to farmers and agribusinesses in the tropical belt. Please welcome Kwabena. The next person is Adesua, the Senior Vice President, Africa Programs of Heifer International. Adesua is a development and fundraising expert. She has developed partnerships that have pulled together millions of dollars from the public and private sector to support transformation programs at scale in underserved communities in Africa. She has over 25 years across the nonprofit, education, finance, research, and entrepreneurship sectors, and she has worked to support several NGOs to find relevance. Please help me welcome Adesua. Next, we have Ayodeji Balogun from Afex. He's an entrepreneur, commodity trader, and CEO at Afex, where he's leading a team of experts leveraging technology, innovative finance, and inclusive agriculture to connect agri-SMEs and smallholder farmers to commodity and financial markets. Let's give Ayodeji a round of applause. And finally, I'll be calling on Dieudonné, who is a youth beneficiary from the Agribusiness Hub mentioned by Sarah. He's from the Youth Integrated Agribusiness Program in Rwanda, He's the managing director of Youth Proud Limited, operating in the southern province of Rwanda. And he opened the company in 2020, and his business focuses on commercial production of vegetables, especially melons, beetroot, and currently employs 3 permanent staff and 20 casual laborers. Can we give him a round of applause? On that note, I'll be moving from this podium to the panel sessions as we start our session for today. Thank you. So I'm going to be starting with Kwabena. And we'll be talking about young people since we started this session today. We know that young people play a key role in accelerating climate action, and we know that the future of our world is in young people's hands, and many are taking actions just like yourself. As an innovator, you're playing a key role in advancing and implementing climate change solutions. So, can you throw some light on your innovation, the key steps you've taken to elaborate on the impact of your innovative climate technologies, especially on rural smallholder agriculture?
All right, thank you for the question. Hello, everyone. So, our technology or the innovation that we do provide is provide provision of accurate weather forecast to smallholder farmers and the agribusinesses that serve them within the African sub-region. So, the key point is, as we are all aware, agriculture in Africa is largely rain-fed, and most of the activities that smallholder farmers need to do depends on the weather. However, if even weather forecast is available for farmers, is not accurate. Why is it so? The problem being that most of the forecast that we have is based on global models. And a typical global model is the forecast, for example, we see on our mobile phones. We can all attest to the fact that in Africa, when you try to check the weather on your phone, it might not even happen. So what we try to do is how best can we then support smallholder. Right. How best can we support smallholder farmers so that they can get this information? So we spent over 5 years doing a lot of experiments to realize that in the tropics you need to understand the physics and also come up with more data points to be able to predict weather forecast accurately. So currently we are still using the global models and also adding our own algorithms and using artificial intelligence and machine learning to improve upon the accuracy. So currently we are predicting twice as accurate as the global models within West Africa. So that's what we do. And through that, we are impacting smallholder farmers by helping them to know when they have to plant, when they have to apply fertilizer, when they have to sow, because all these ones are weather dependent. And also to support agribusinesses who are working with them to know even and plan their logistical and operations. Because we know most agribusinesses do support smallholder farmers with inputs. But through getting to know the seasonal outlook, you get to know when can you plan for distributing your seeds to farmers to avoid diversions. And when do you even have to take trucks to the field to get the maize or whatever grains or output from the farmers. So this is what we currently do in this space. Thank you.
Thank you, Kobena. I have one more question, and this is related to, jobs for young people in the sector. Can you tell us what pushed you to embark on this career path? And if this choice was influenced by your personal attitude and values towards climate change, when taking this up, did you weigh the cost and benefits of an alternative job opportunity or other career paths available to you?
Right. So I'm trained agricultural economics. So through my work, something that also gladdened my heart is to find solutions to ameliorate the problems that farmers do face. And I realized that one way to go is through technology. So me and other youth alike. So currently at Ignitia, the average age is around 32, meaning that we are quite young, trying to innovate within this space. So there have been other options. I once tried to work in the bank, but I realized after one day that wasn't a place for me. So I still keep being in this field. And I think, yes, I wouldn't say it doesn't pay, it does, but you need to be a social entrepreneur. If you're looking out for a space where then you put in money and the next day you can get it, then I think that's not a place. But if you believe in long-term investment and supporting people, and at the end of the day making something out of that to pay the bills, then I think it's a place to be. Thanks.
All right, so we do know that you can get a decent job in the climate change space. Thank you so much, Kwapena, for those remarks. I'll come back to you in a moment. Let's turn to Mr. Yodeji. As asset owners and asset managers involved in directing capital to investments that generate positive social and environmental impact alongside financial returns, impact investors will play a unique role in driving climate action to accelerate the transition to net zero and avert the catastrophic effects of climate change. We now know beyond all doubt, after all that has been said today so far, that the time to act is now, and all reports are showed that we need to take action. And there's a huge opportunity for the finance sector to use its expertise to move capital into the right areas. Many private, sector players like you have been deepening their impact from supporting business models that do less harm to making impact investment and building businesses that actively deliver solutions to global issues. So my question for you is, how are impact investors approaching this agenda, and how has this growing community collectively worked together to drive results? I want you to look at what are the barriers from both the investor and the smallholder perspective to, adopt impact investment principles.
Thank you very much. The fierce urgency of now is, where I will first want to talk on. And the way I think and rationalize this, but also sort of, talk about it is that COVID was one big, blow to all of us as humanity, and Africa not excluded. But think about it and think about another sort of seismic event of that sort related to drought or flood, um, holding all of us back, and it could be a lot more, catastrophic, but also would affect even the poorest even more significantly. Pakistan is going through the same. Last week I was on Mount Elgon in Uganda, so I saw firsthand the examples you make. We were there we meeting some of the farmers and looking at, first is the flood, second is the wave of birds, the quena birds, and how they affect their crops, and how also for the first time ever in that region, there are experiencing shortage of rain and water for the first time ever for people that have lived in that on top of the mountain for over 200 years. So for me, if we think COVID and it scares us because it still scares me, we have to think climate, particularly as it relates with food systems, at the same level of fierce urgency. When it comes to financing it, so there is a very big movement around green finance, and it's quite a very big capital. So if you look at the tiers of capital structure, from ESG to more impact investments. And if you take it down even a bit more focused, there's even a smaller niche, which is sort of like green finance. And the essence is that how can you unlock, use the power of the capital markets, the global capital markets, the development, economies to unlock capital that can be focused on supporting innovations that help to build resilience, help to cope with climate strains, but also drive businesses that have also adopted some of those principles. Now, there's been a lot more, and I'm speaking this both as the CEO of AFEX, but also as the chair of SAFIN, Smallholder and Agri-Finance Investment Network, because we've done a lot of work. Almost the last year of research for us at SAFIN was focused on grain financing and advancing how we can create better structures to unlock capital for agriculture. So you've seen advancements in renewable energies, huge capital in the last 3 to 4 years. Everybody that raised around renewable energy got it over a field. And that's because for some reason, it's easier for them to create a mechanism that says for every watt of energy, this is the this is the equivalent savings I'm making. So this is the dollar equivalent for that. There's a clear taxonomy, a clear structure, a clear line of impact. It's been difficult to build a business model around it. So a number of the businesses have struggled outside the subsidy. But if you look at the ticket size of the subsidy and the investment is quite large. The businesses are also a bit more higher on the SME spectrum, so it's easier for them to attract those capital. When you draw a parallel to agriculture, which will be the other big arm, even probably larger in terms of accessing that green capital or impact investment capital more broadly, you find that it's been a bit more difficult, partly because we've not, particularly in Africa, where we're probably the most green in food production, probably because we don't have a choice. You find out that we've not been able to find that taxonomy that says for every hectare of smallholder farmer, this is the climate, for maize, for sesame. If I go up north and I'm growing in the semi-arid area and I'm growing a pulse versus a maize, what savings do I have? If rather than clear the bush and expand my cocoa production, I choose to intensify production within my existing plots, the best you get is an $100 coupon at the end of the year, which doesn't make you better as a farmer. So we've not been able to build a clear, effective system that makes the investor understand and say, for these dollar investments, this is what I get in agriculture. And I think that's one of the very big tasks that we have to do. The second one is to then get the businesses ready, and that's the same for climate capital, but also all capital in agriculture. Businesses are just not structured enough. And then, if you look at it on the investor side, smaller ticket transactions would say, I'm going to give you maximum $1 to $2 million, but your due diligence will cost you $200,000. Like, how does that happen? Bigger ticket transaction will say, I have money, but I only give guys you $20 million and above. Like, who has that? How many businesses have that in Africa? So that mismatch exists. The cost is real. The risk and the guarantee cost is actually there. There's been a lot of innovations, but nothing that solves for the average, $500,000 African SME.
All right. Before you go, I just want you to drill down, as you have established yourself as an impact fund serving smallholder farmers and agribusiness SMEs. What has really enabled investments, particularly that in the climate space, for you, for your organization itself?
So a few things. So we are a commodities exchange. So essentially our job is to connect three people. So one is the producer, primarily smallholder farmers in Africa. Second is the processors, who are the ultimate buyers of the commodities. And third is an investment committee. So asset managers, fund managers, how can you then create instruments to bring in money to them? Now, the biggest problem we had first 10 years of building Effects is that the three people speak very different languages. The producer talks big tons, sheep, ex-factory, Incoterms. The processor talks Incoterms, metric tons, thousands, big tickets. The smallholder farmer talks 3 bags, yield, fertilizer, inputs, loans. The investment guy talks bonds, treasury bills. So, finding how to then create a cocktail of products took a while. Second is that the risks are real. Operating at that spectrum of production, it's almost, there's an item that say, the closer to the farm gate you are, the poorer you are in the value chain. The risks are real, the vulnerabilities are real. So how can you then first manage, if you want to securitize either commodities or producer groups or instruments that bring in capital, you have to be able to manage that risk. And that requires investment in operations. So for the first 6 years of 10 years in Effects, we're building warehouses, giving farmers digital identity, training them on agronomy, finding how to manage the risk to a point where it then makes sense to take 1,000 farmers that want to take a loan, growing the same crop in the same area, creating and fixed income notes on top of that, and then making that available to asset managers, fund managers. And then on the other side, they look at it and then they say, oh, this is a note. This is a green finance note. It's fixed income, it's a discount instrument, I can invest against it. So that process, the innovation, the innovative finance is probably one of the easiest part. But before you can securitize, there's a lot of hard investment and long-term capital that has to go to de-risk the operations. And I think that's the difficult part.
Thank you very much. So we'll go back to Kobena. You've been working in this space for quite some time now. Can you help us to prioritize what is the not single, but the number one barrier, in your opinion, that needs to be addressed to unlock action towards sustainable innovations for climate change mitigation and adaptation, especially to support rural young people in agriculture?
I would take it from the digital services perspective because that's where I am, but I'm sure it also affects other sectors as well. For me, it's farmer traceability or getting the farmer database. I think it is one big issue when you are providing digital services to farmers. That we do face challenges where, for example, some organizations can decide to support maybe 50,000 farmers with digital services, but you get to realize that you need, for example, the phone number and the GPS coordinates of these farmers to be able to give that hyperlocal weather information that we provide, but you realize it's non-existent. So I think support to really get farmer database across Africa would be a way to go in case we really want to strike this sustainable way of supporting climate change. Thank you.
Thank you, Kwabena. So digital or data of farmers is really, really critical. Now back to you, Ayodeji, before I go to the others. When you were speaking, you talked about, the different levels of finance, from ERG to the coming down to specific niche green investment. How important are green investments in developing countries, and what market forces are improving the business case for that specific sector?
Thank you. So it is, capital is extremely important, particularly for agriculture, particularly for sub-Saharan Africa. So, and if you can look at this and look at the financing gap, right? So, look at credit provided by commercial banks is 2% of the size of the economy. And then if you consider it's 2% of the size of the agricultural economy, it's 6% of their total portfolio, about 4% continental average. But if you compare the quantum of capital that goes in, it's to the total GDP of agriculture, the magnitude, it's just 2%. That shows you how underinvested agriculture is. When you then look at it from how to build, how can we have a food system that is sustainable? How can we fund production and storage and then market? So in our experience, in our view, you have to build three things simultaneously. So you have to solve for access to capital itself, you have to solve for access to markets, and then you have to solve for productivity. And then you have to do these three things simultaneously. Now, most often, projects, development, governments focus on one or two of these three. So what then happens is you solve for productivity, create a subsidy program, farmers produce more, everybody flocks to that crop, push it into the market. There's a glut, prices fall, nobody can sell. You're back to square one in 2 years. You have the market system that works, then you then have the deficit on the demand side. There is the commodities there, it's produced, but then there's no cash to finance it. So you have to triage these three things simultaneously for it to work. The question is always then, almost like who does what? How do you want the, capital provider to come and solve for productivity? Do you want the, the guy that is solving for productivity to fix the market? And how can you build a system or an ecosystem that works and solve for these three things simultaneously? For me, when we get that right, then we start to have systemic changes in agriculture, and we start to get, both the cost of commodities lower, but the profitability of farmers higher.
All right, thank you. One last question before you go. You kept mentioning risk, 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 risk. Now you need to tell us what is needed to de-risk green investment for young people. We all know that access remains a challenge. Youth-led small-scale agriculture is perceived as very risky for lending organizations. What role can stakeholders play to de-risk this investment?
Yeah, if you allow me, there's almost like a precursor question, and I keep asking myself, will an educated youth today choose agriculture? Is it attractive to them? You know, think about it. Think about your 20-year-old cousin or brother, you know, has a degree, probably has paid through the university, has a graduate of economics or graduate of agriculture or graduate of, engineering. Will he choose agriculture as a choice, as an investment? If he wants to start up a venture, will that be the first choice? And what part of agriculture? Is it attractive to them? And for me, until we're able to, and this is a difficult conversation to have in many areas because there is a desire to focus on agriculture as a means to reduce or end poverty. And what we've only achieved by that is create hundreds of millions of poorer, less poorer farmers, right? With nobody that has actually made money from the sector. My question and what I keep worrying about and push my team to keep thinking about is how can we create a sector that at least gets a young guy coming in to say, in 2 to 3 years, you will earn $20,000, $25,000 from this every year. Until we're able to create that, I don't think we're even worthy to have an engagement with the youth. So, that's a challenge I keep pushing out. How can we build a system that thinks of these guys earning $20,000 in 3 years? If you can't get them, why do you want them to participate in the sector? So that's the first one. The second one is how then do you then create manage the risk that then when they come in to then, protect them so that they don't lose both their capital, saved, but also, future prospects. A few things. So the ecosystem, we have to think ecosystem, right? So rather than siloed operations, we have to think how can we create ecosystems? My friend Jay Hill, we've been figuring out to bring in mechanization and tie it into commodities and production and input supply. When you start to have ecosystems that leverage each other that way, you start to create a pathway. So rather than a youth coming into agriculture trying to figure out how do I plow my land because I'm not going to use the whole, how do I get loans for fertilizer, how do I get trained in terms of best practices, how do I get solar irrigation systems, how do I get markets to sell my commodities, can I hedge my products, where do I get insurance? So one of those kind of things is that for the last 3 to 4 years, we're working with Pula, also on ag insurance and how to create climate risks. So, my view is that we as players in the ecosystem, development on one side, but primarily private sector actors must start to think in terms of how do we build an ecosystem that creates a safe space for these youth to come in. So they come in and then they can get a bundle of products that then minimizes their downside risk.
Thank you, Adeji. I'm going to throw this same question to Pathe. What do you think we can do to de-risk green investment for young people?
Thank you very much. And I think the OG mentioned quite a number of things, and it's very important maybe before responding to this question and look at it more from a perspective, an investor perspective, but also from a government perspective. So you have two sides. You have the government enabling the environment, and you have investors, and you have the third group, which is the smallholder farmers. Smallholder farmers in the context of the African context, particularly the Sahel, the whole band from Dakar to Djibouti, they are extremely risky. So if you have your money, you're wondering why you should lend to these people that don't necessarily know where it will rain or not, or if it rains, when they will harvest or not, and the post-harvest losses, which is more than 70% of what they will harvest. So this is whoever has money, and a bank, an investor, a pension fund, a green funds, whoever, that's the question. So now from a farmer's perspective, obviously, as they are like consider as risky, they are not even going there. So this is the issue, particularly for young people. And it responds also to the question of Adeoji. If you are a young person and you have a degree, why are you going to get there, and what are the mechanisms? What should be in place before you start getting into this business? So I think from a producer perspective, if you want to get into this one, de-risking yourself first, start with the mindset. Today, we can't do agriculture like our grandfathers and grandmothers. So traditional agriculture, where you see people in West Africa, they have those like traditional tool, daba and so on. That one has to be removed from all images and so on. We need to improve the production. Africa has the lowest productivity in terms of yield, quantity across the world. So because we continue to do business as usual, that one. Second, I'm happy to be here also because of young people and so on. So technology, adaptation, risk, when it speaks well to the young people, obviously won't speak to the old because they don't necessarily know and it will take time. So now we need to work with the current generation, and it's very important to have this new mindset and take it forward. So adaptation is key. To de-risk yourself, agriculture rainfall, we need to move from 3 months of rain, 2 months of rains, to now producing the entire year. And the entire, it's not like we don't know. We now have the adaptation practices, the know-how. So we need to put now the business model and the different one that works, bankable, de-risk project from a producer perspective to go and get it financed. So from my perspective, if you are farmers, that's the first step. From a supply side, those who are giving the money, a bank, a private sector need to look at this agriculture as a business, as a niche, a market opportunity, not really as a risk. And to do risk, we have several instruments. Obviously, you have insurance. We were talking about, those different partners who are in the market that can work with the bankers, but also investors. And today in Western Central Africa, we have a program on insurance, which from IFAD perspective, we provide 80% support to pay the premium. The farmers will put 20%, 60%. It's a degressive basis. After 5 years, they know how to do it. But it's not like they're paying cash, they're paying with their production. And then later on, they can integrate it because the cooperative is managing their premium and they receive a payout. You have also Africa Risk Capacity, which in fact also provide premium, but at a continental level for countries. So all those mechanisms are de-risking mechanism, which help also to lower the risk from a country, but from also investors' perspective. Now, from investor side, within the banks, within the investors, the ESG we are talking about, the risk mechanism, the screening tools, the metrics, to know that this is an adaptation is key and important. It needs to be integrated as a normal practice. I will finish with the government. Government today need to look at adaptation because we're talking about de-risking. De-risking, if you put adaptation as a mindset, obviously you're de-risking the sector. They need to look at adaptation as a public good. Co-benefit, direct, indirect. If you look at it that way, obviously it's a market for you. If you look at it just as an add-on or something that come on development, then you won't move forward. So second, also pricing. Adaptation, technologies, practices need to be, you need to put a price on. If you put a price on, the private sector will comes in. If there is no price, they don't know. And third, we have also to put universal metrics for adaptation to track it. There is no agreed universal one. If when one country is doing A, the other one is doing B, and you don't know how to account it, and obviously then we have issues. And that need to be tracked from the public expenditure review, from a finance bill, how they allocate it. So tomorrow, not only government, development partners like IFAD or the others or HIFER are saying we are doing adaptation to the risk, but also the government will show from their flow of funds that this is going there. And jointly, all of them put together, I think we can lower the risk and then make this agriculture attractive for young people.
Yeah, thank you, Pathe. So we're going to go into the core of your work as the lead regional environment and climate specialist in Western Central Africa. You have supported in mainstreaming and managing climate, environment, and social risks to create opportunities throughout the IFAD portfolio. So, given the competing development priorities in low and middle income countries, what is the chance in building better and greener in a way that leaves no one behind?
Thank you. So it's a big question, and leave no one behind, which is also I think the agenda which we have set since 2015, which is a good thing because this agenda also give a perspective to all countries. It's universal. And second, also aside the SDGs, you have also the Paris Climate Deal, which is to curb the global emission and keep it to 1.5 degree. So at least we maintain it. So this is like the global agenda. Now, low middle income countries competing resources. In fact, if we, Sarah also mentioned in the introductory remark, so we are in a world currently characterized by crises. So you have the COVID, we are just getting out from it. We don't even know if we are out of it or not yet. So you have the Ukrainian and Russia crisis, which is impacting on food system, food and security. And you have climate change. And in fragile country crisis, which is more conflict, it is there and then continuing. So many, and in many of those low mid, and middle income countries, they're experiencing this one. So this situation forced those countries to divert their very narrow fiscal space and resources to emergency response. So you respond to emergency after emergency and not necessarily putting the scarce resources on long-term development like climate adaptation, green development, and low emission and climate development. So we are now in a situation where you have dual challenge, uh, emergency response and build back better. And the build back better we are talking about is more how to do it within this context, but getting green and inclusive. And to respond to your question, which is hope, chance, I think yes, and optimism. Obviously, from IFAD perspective, what we've been doing over the last past years. So since 2015, we started by saying environment, climate has to be mainstream 100% in our portfolio. So up to now, it is there. So which any operation you have in a country, you need to show the evidence before that project is approved, 100%. Later on, we had social inclusion aspect, those mainstreaming areas. So put at the center of the operation, the human being, smallholder farmers. It's youth, it's women, it's indigenous people, but also nutrition, because that's also the backbone of the household. So that's at the center of the work. They are mainstream 100%. And we move the bar higher by putting targets. So in the development financial institution, MDBs, many of them have targets, whether they say, I will reach it 20%, 50%. From IFAD perspective, it was 25% for climate, 25% for genders, 50 for nutrition, 50 for youth. And now, since this year, for the next coming years, again higher, 40% for climate, 35 for gender, 60 for nutrition, and also 60 for youth. And this is going to go higher in some countries and so on. So it is very, very important to track it. And we are tracking it with tools. We bring an operation, we look at it, and we say, you are integrating. So in a concrete way, you go to Nigeria or here in Rwanda, you look at a project, you can show how much these activities are adaptation related or gender related, how many women are integrated in the decision making and benefiting from the resources. So from a mainstreaming, from operation, now we have specific program, adaptation flagship program, which is called ASAP. Many of you may know adaptation for smallholder agriculture in the entire African continent, but also outside. We have also very innovative program we are building with green funds, green climate funds, the JEF, the adaptation fund. Some of them are on green banking, inclusive to access to 0% interest rate banking for smallholder farmers, particularly youth and women, insurance programs, and so on. We have also some stimulus fund, since we are talking about COVID. So over the last past years, we've been deploying some COVID response programs in many countries across Africa, and this one linking markets to farmers, but also providing inputs in a situation where you have disruption of the market. And all these specific program innovation are connected to our development program. And we are doing it not in silo, in partnership with many organizations to make sure that whatever we are doing is responding to the crisis. And again, hope, and I think by 2030, if now we increase, that we will need more resources to achieve all those ambitions.
Thank you, Pathy. I'm going to move now to Dieudonné, one of our young agribusiness hubs beneficiary. We know that the Integrated Youth Agribusiness Hubs program supports the aspiration of youth to establish more profitable rural enterprises, and it provides, training, capital, capacity building, shared facilities, and all of that. We know that agribusiness is your business. As a young entrepreneur, how have the trainings from the Agribusiness Hubs program helped you to reduce risk in your business? And how do they benefit the most exposed to climate change? What are the conditions that enable or constrain your business as it relates to climate change?
Okay, thank you so much to everyone. First of all, excuse me for any error done in my talk, because in the rural area we are accustomed to use the local language, but I hope that God helping me. So thank you for a good questions. I'm here in front of you in two sides. One side, I'm here as a farmer or entrepreneur who struggled enough and affected by climate change. Second, I'm here as a graduate from the training provided by Keynote Address Rwanda under the project of RIS Menyawigire in partnership with IFAD. So, my name is Dieudonné from Southern Province, Niue District. Of course, I have a company. I created the company deals in the vegetable production, especially beetroot and fresh beans. Of course, before coming in the training, I have struggled enough and affected by climate change. Here in Rwanda, we say that information first. At the end of the year 2021, there is a formation around the social media who calls the young people to make application where the Keynote Trust provides different options like agriculture trainings in vegetable production, animal feed, and irrigation. So at once, as a man or entrepreneur who struggled enough from climate change, and who, first you can know that in my education, I don't have a background in agriculture. Then, at once, I make application online. Then I was selected to make a training in vegetable production, as I have in my business. So, we passed 4 months in training, 3 months on the desk, and 1 month in the internship. Where in the 3 months we have a training about how to become a climate resilient together with vegetable production. We did different tasks where we thought about how to make a greenhouse, how to make installation of for irrigations, how to make, how to control environmental conditions, like temperature, like moisture and humidity in both in the greenhouse and in the open field. So after that, just I took a decision. I have just struggled enough in my business without skills in agriculture and how to manage environmental conditions. What can I do in the future? So after the trainings, I have a decision that I will never struggle from climate affectations. So in this moment, I'm here to telling you that if you don't have skills in your performing or in your activity, nothing you can do, nothing effective in your business. So, as a graduate from the trainings, I'm here to tell you that
Okay, let me help you, Diodone.
Okay.
So what steps, so you wanted to talk a bit about, after graduating from the training. So
Okay.
since you've graduated from the training, what steps have you taken in your business? And how do you think other young people can get the skills that you've gotten to better help them manage climate change?
Okay, thank you so much. So, many farmers in the rural areas or other sides, they focus on rainfall. They change like an animal called the chameleon. When the rainfall comes, when the rainfall comes, they can do their work. But when the dry season comes, they change, they stop their work because they don't have enough skills of managing climate or managing environmental conditions. That's why I can say this. The trainings can help me to improve their skills by providing them the climate resilient technologies like a greenhouse and irrigation system. I think so.
Thank you very much, Diodone, and thank you for the insights you've provided from the youth in the rural area perspective. I'll then move on to Adesua. We know and we've said from the introduction that Africa faces exponential collateral damage of climate change, posing risk to all our economies, infrastructure, water and food systems, agriculture, and even livelihoods. It's even threatening to undo the modest developmental gains, and it's leading to Africa slipping into higher levels of extreme poverty. With Heifer's vision being ending hunger and poverty while caring for the earth, what is Heifer's strategy to support smallholder farmers who are mostly at the receiving end of the climate change impact?
Thank you, Landry, for the question. It's just been interesting listening to all the other panelists and also the opening speech. I think a lot has been said here. And I will just briefly talk about what we're doing as Heifer, then talk about how we see the future and how we think that we have to work towards the end game. We've been in the continent for over 46 years, and our work has primarily been to end hunger and poverty, working at a rural community level. Having done that work for all the years that we have done it, we understand that there is a strong connection between ending hunger and poverty and creating meaningful jobs and moving people above, not just above poverty line, but to sustainable livelihoods. Now, to achieve that in a continent where 60% of the population are youth, and we are constantly having an aging population at their cultural end, it's a no-brainer that we have to now begin to look at the larger population of our continent, the challenges they face to even integrate into the job market, that was well elaborated on in the opening speech, and the critical importance that disruption around the livelihood of young people in Africa will have on the future of food in our continent. Let's look at agriculture. We have the world's largest arable land. The potential, the opportunity for livestock, for crop, and etc. is in abundance in our continent. So for us as HEFA looking at agriculture, it's because we see it as a critical platform for transformation. But again, we now talk about the impact of climate change on agriculture. And we also talk about recent data like the 2019 statistics that was brought up by a coalition of agencies that showed that continuously the poorest of the poor will always be at the end of receiving the highest impact of climate change. Why is this? The poorest of the poor are engaged in agriculture and they live in the rural communities. So when we think about agriculture as a potential but with a huge risk of climate change, what we see young Africans' ability to be gainfully employed as the engine to push our transformation as a continent into the future, it's a no-brainer that we can no longer have silo conversations. We can no longer talk about climate change in one session, youth in another session, technology in another session, finance in another session. These issues are all integrated. And as soon as we can begin to find the connection between all these issues, then we are now at the beginning of resolving the problem and coming to a sustainable end. So for us in HEFRO, we've done a lot of work at the rural end. We've done training, capacity building, but in the next 10 years, we see the role of our organization as not implementing at the end, but stimulating technology and youth as a tool for transforming the challenges we face across the agricultural landscape. Questions have been asked here about where should innovation happen. For us in HEFA, we see innovation happening across board. So 15 years ago, when we saw the challenges of hunger and poverty and the pressure on the Sahel, we realized that that's a critical place to invest. The Sahel also today is experiencing 1.5 times higher amount of increase in temperature compared to the rest of the whole world. We also understand the issues of water and drought in that region. And 15 years ago, we started one of our projects in Senegal. And there we've worked to strengthen the resilience of youth and women. And we do a lot of projects there in the livestock space, understanding that pastoral is one of the highest or the largest amount of employers of the poorest of the poor in that region. Having done that work across places like Senegal, after 2020, we began to look at integration of innovation into the work that we do. We began partnering with Ignatia, and we began looking at how can we leverage technology to provide access to climate resilience for the poorest of the poor. In a project that we launched in 2021 with a goal to impact 30,000 farmers to build their resilience through giving them access to digital data on current climate conditions. We've been able to see how that pilot project itself is showcasing the role of technology at the last mile. In addition to that, when you look at the Horn of Africa, we have begun to do lots of projects focusing on youth also and women in the Horn of Africa. In Malawi, where you have great issues of landslide and unpredictable flooding, we've also worked extensively there also to build resilience. One of the things that we believe also is that working across the agricultural sector to support and build resilience also requires thinking about the interplay between insurance and finance. Insurance is an interesting instrument because, one, it secures farmer income even after the impact of climate, but on the other hand, it also de-risks the farmer to enable access to finance coming to farming. So what have we done in that space? Working also in a vulnerable value chain, the rice value chain in Nigeria, where lots of farmers have lost over 1 million worth of crops due to flooding in the last 3 or 4 years. What we've done so far is to partner with, again, another tech innovator, Pula, to create what we call the pay-at-harvest instrument. This is innovating at the finance side to say, farmers struggle to pay at planting season. So can we, rather than subsidize or give them a grant, can we front-end the investment at planting season and have the farmers pay at harvest? And so innovating in those areas and looking at the importance of not the work that HEFA does alone, but combining the work of lots of innovators that we see across the space is how we see our involvement going into the future as it connects to what we've done in the past. But one thing is in the core of what we are going to do in Africa, and that is understanding that we're not trying to help young people have jobs. We're trying to unlock the potential of young people to transform the continent. There is nothing we are going to do in addressing sustainable climate change in agriculture without looking at the science, looking at the data, and looking at the technology. And if we're going to do those three things, who are the drivers to enable this happen? And Ayodeji said something I found very interesting. He said, how do you get a young person to even want to work in agriculture? So we see what we do as extremely integrated, not individual projects, but projects that have to now become more strategic as we look at the long game. What does it take to incentivize young Africans to want to be in the agricultural sector? Aside from building capacity for those in the rural sector, can we also build role model for those who are innovative? Recently in Uganda and Ethiopia as well, but I'm going to start the Uganda example. Our youth innovation competition gave awards at a country level to reward young innovators who are innovating across agriculture. One of the interesting innovators was a young person who had innovated on a solar pumping machine to provide irrigation, for the crops that they were farming in the horticulture value chain. I believe that aside from supporting young Africans to tell them what to do and to train them, they also live so close to the ground, and with their exposure, they have an insight to solutions. So I see that one of the things that is important that we will continue to focus on as we go forward is how do we unlock, support, enhance, and also invest in some of these innovators so that we can trigger a ground-up effect in terms of crowding in young people into this space. Because not only will they come into the agricultural space, they can also be boots on the ground to address climate change. We can actually be able to see them being able to use the necessary technology, like we talked about, where we talked about Ignitia and what's happening in Ignitia. But young people are the ones who can be the foot soldiers, the front end people, driving the technology and innovation into the farms, into the communities, supporting farmers who are mostly aging, to be able to begin to adapt this technology so that we can have a more sustainable solution to the challenges that we face. So I hope I know I've said a lot.
Thank you,
but
Adisa.
thank
You've
you very
actually
much.
even addressed my second question. And in concluding the discussions among the panel, I'd like you and Pathe, starting with Pathe, to share your thoughts on expanding availability of climate finance to developing countries. How can we especially incentivize greater private sector investment across the key transitions needed to address climate change? Starting with you, Pathe.
No, thank you. It's a very good question because currently, as I said earlier, the investment on adaptation from the private sector and the government is very insignificant compared to development partners. So we're still on business as usual. And the private sector, again, if we want to do it, I think I have few points. Number one is this is a public goods. From a government perspective, it has a potential. We have the pricing and we have the metrics. So that's what the government should first put as a speech, but as a narrative and make it as a reality to bring in the private sector. Two is incentive. So the private sector, before they came in, they need also the incentive. So the enabling environment, which the government has to play a key role. So that incentive will start from, supporting the different instruments and that ecosystem, which some of my colleagues was talking about, which is the instrument, which kind of instrument is available, and to go to the smallholder farmers. We are talking about loans, we are talking about grants, reimbursable grants, equity guarantee, and those different instruments has to be there. So at least they're able to channel so the different resources they have depending on the different instruments. Third is also, the when we are talking about an incentive, for them to have also the incentive to incentivize themselves to get the financing, the lending terms that are right for the smallholder farmers, it has to be there. Maturity and also interest rate, which is really key. If those are not there, so even if the private sector is there, so there is no connection with the farmers, there is no connection with the processors, and then the money is there, but nobody is taking it, and you can't get the different actors together. So it is important to have that aspect as part of like one piece on and the different dots together. I think fourth is also the tracking. When the private sector comes in and say, I'm doing A, B, C, D. So show me the numbers and show me also the different tools. And me as a government and the client, so we can also move together towards the green, low emission and climate agriculture. I think the central banks in many countries, plus the different financial institutions, should play a key role. Central banks can provide to ratings agencies, to the banking sector, the financial institution, the direction. If that is integrated as a policy from the top, it will also drive with the different incentive from the central bank, the private investors to come in. And now I think we need really, aside the private sector, to put also public money. So, public money for technical assistance, like one of the farmers said, when they get that know-how, it's much more easier to work with them. But when you're dealing with those so the discussion and the language, the understanding is much more complicated, and that should be grant related, and it's gonna help both to connect. And I think that way, so the private sector will play their role. We put price on adaptation technology, on the practices, and we know that when we talk about a climate resilient road in a rural village, what it costs, what's the real cost. When we talk about, climate resilient variety, whether it is an Erica 19 for rice or another variety, this is the cost. So at this, you look at the incremental cost, which add on a business as usual development, how much it costs. This is what, from a private sector perspective, you will get if you put a business and get running. I will end with business model. All we talk about, to me, there is no shortage of money in the world, and we know. So we know people are sitting on money, but before they get money out, they need to know where that money going. We lack of de-risk and bankable project. When you get de-risk and bankable project and the right business model, the private sector will come in. Over.
Over to you, Adesma.
Yeah, thank you so much for that. I think one of the things that we must understand that is critical in the agricultural sector is that there's no lack of money. Investors are investing across, and investment is increasing tremendously in Africa. Why is it's not coming to agriculture? So what we must also understand is that it's because most of what we are doing in agriculture is happening at the last mile. The last mile lacks infrastructure for data gathering. Without effective access to data, finance will struggle to follow. Just like what has been said by IFAD, we need to know and have the relevant data to build the financial models on. So having said that, I think we have to innovate in two areas. We are talking about innovators on the ground, we're talking about young people innovating, but we also have to talk about access to data becoming more innovative, but also financing becoming more innovative. We have to think differently about how we see traditional barriers to access to finance to farmers. For example, issues like collateral. We have to think out of the box of how do we see collateral? What is it really? Is it really collateral, or is it about visibility and understanding of the track records and the transactions that farmers have? So that is on the one side. On the other side also, finance and the way it is structured is not sustainable, and it's not an appropriate match for the way the innovators are already innovating. A little bit of understanding of what innovators are talking about and are seeing that can now drive how finance can be restructured is critical. And so I would challenge us to say that every single one of us needs to be in the innovation business now, both on those providing the funding and those who are receiving the funding. I also think that we have to now look at how very interconnected issues are, like driving young people into agriculture and innovating around data and access to data. Because one without the other, we might not really be able to get to the end of where we need to go to. So I would challenge to say that grants have to become more innovative, investments have to become more innovative, and we all have to understand that this has to be a collective effort in transforming how we think about driving to achieve these goals that we want to achieve in agriculture.
Thank you very much. And on this note, we'll bring the discussion to an end and open the floor for Q&A. I'm sure we all have enjoyed everybody's contribution, and we may have one or two questions in the room.
this is the time to ask any question to any of our panelists. We have a hand at the back. Who's helping us with the mic? And we have another one right there. Okay, 3 questions. Oh, and 4. Please go ahead.
Hello. Hey, thank you for the excellent discussion. My name is Murat and working for Wageningen University in the Netherlands and C3IR. I'm a scientist and really passionate about the youth. I think in the transformation debate, we are actually missing the youth as a person. One of the things I learned around that it's good to have enabling environment systems and so on, but in the end, what will make the change that youth who will choose to stay in the rural areas and who will continue transforming. One of the things I learned coming from, let's say, Eastern Europe, from Turkey, you know, you go to the village, if you have a really smart young man, when he gets money, he will buy a boda, disappear. If it's a smart young woman, she will start working for the NGO or become a teacher. We will lose the agriculture. I think one of the things we're really missing, we have to find those ways of targeting the young people who will stay there and really transform. And usually the research shows that the answer of who that young people is about more communal ties, family relations, and social profile than the money. So I think we need to really come together and find ways how to prioritize those young people who will choose to stay there. And any ideas, any tools that you know, I would love to listen to that, and I will be very happy to also contribute professionally.
Thank you very much. We'll take a second question so that we have 2 questions because we have 4 questions and then we can. So, second question.
Thank you very much. I think...
Please introduce yourself.
My name is Olivier Movandimwe. I work for Rwanda Youth and Agribusiness Forum. It is a nationwide platform which promotes youth entrepreneurship and employment. Actually, I would like to give you a small testimony on what you do. Then based on that, I can ask you the questions. Actually, one of the main challenges the young people faces, I mean, when I say the young people faces, I can see the young people from the rural area in agribusiness or in agri-food system from the rural area, as well as the urban area or peri-urban area. But for example, apart from a membership, almost 80% of the young people are in rural area. So the challenge, the first challenge the young people faces, access to finance. We looked it into 2 sides, demand side and then supply side. Most of people, they don't see 2 sides. The first side is on part of demand side. If you look at the youth businesses, even those ones that are in a very good shape of entrepreneurship, you find that they don't do record keeping. It's falling within the financial literacies, and even some don't have business plans. And then the question goes on, then how a bank, a financial institution can give you the money if you don't have a record keeping. That is a problem. It is a problem on a demand side. And then on the supply side, the bank or financial institutions have certain restrictions. They have conditions. They can't give out the money without trust, without conditions. So on a part, we have designed the model with the FAO called the Fit for Finance, where now we are building a capacity of young people, at least help them to understand the language of financial institutions.
Okay, can you proceed to the question? So quickly take that.
That's a part. Then my question directly goes on, how do you plan? I saw that you have been speaking about we need to ensure that we are based on data-driven. We need to be data-driven so that financial institution can see where to start. Then you are representing various institutions. Do you see that it is important to start with the training capacity, building capacity of young people, so that at least they can understand the language of what is the requirement to get financed, either if you go to matching grant or if you go to loans. That's the first one. You see, it is important because this is the challenge, the serious problem. If it is not solved, we never get the young people into getting access to finance. We need to build their capacity. You see it as important. That's first one. The second one, if you go to financial institutions, previously we were in the agri-PPD, agriculture, public-private dialogues. And then the first question raised was that some bank, financial institutions, they are staff in charge of credit officers, they don't understand even the language of agribusiness. So, and then as a conclusion was that we need, even they needed to be a kind of agribusiness literacy for the financial institution, at least to understand the requirement, to understand the language of businesses, so that they can really match in betweens. On the one side, the young people understand the requirement, the language from financial institutions, and another part on bank side, the bank really understand the language from the young people who need really to access finance. Do you see it important? Then if you see it important, what are you doing on that, considering two sides?
Thank you
very
very
much.
much. I think the question is very clear. And the two questions are really targeted at young people. How do we understand them better? And how do we look at the demand and the supply side for finance? So I'll throw the question open to Adesu and Pate, or Ayodeji as well. I mean, quick responses to the first two questions.
So I think my quick response is training is certainly very important. Working at capacity building sites is very important. We've done projects across East Africa. We've worked with building the capacity of young people to prepare them to receive access to finance. We've seen that there's also a correlation between education levels, literacy levels, and how acquainted they are to using technology. Those are all critical skills that's important at the youth side. On the finances side also, I think that when you talk about youth business that are rural, that are at the community level, before you start going to traditional finance, it's good to provide a track record working with their circles, working with their co-ops, working with the small associations of youth that they have, to show a track record of lending and repayment that allows them to now be able to move outwards. Unfortunately, it is almost extremely challenging for them to be able to meet the set criteria as it is today by the traditional lending institutions, even at the microfinance lenders. So whilst we work on innovation on both sides, I think that there are huge opportunities within the communities where those young people work to think out of the box to see how they can also access finance within their own localities.
So, okay. So on the first question, who should stay on the farm? And how do we then target the right guys that will stay on the farm to invest in? I like to flip. I'm a market guy, right? So I like to flip that aside and say, how do we make it attractive that the guys in the city want to come to the farm? And it is possible. We just need to figure that out, and it's not easy to work a system that makes agriculture attractive enough for a guy, even born, trained, schooled in the urban area, to say, I want to go and be a farmer. I want to start 4 or 5 hectares, and I want to grow to 15, 20 hectares. I think that's part of what we must figure out.
And I would add to that to say, if we figure out infrastructure in the rural areas, we'll come close to figuring that out. Because with the right kind of infrastructure around the rural farming communities, then we are now talking about accessibility. If we do not have access to internet, for example, at the last mile, it'll be difficult to get young people to want to stay at the last mile. So again, this is another thing that is also connected to access to finance, to building agriculture, to creating jobs in that sector for young people. It's infrastructure.
Maybe just to add to my colleague's question on the targeting. In West Africa, which I'm more used to, and there have been investment boards that are financing the agri sector and other sectors, some studies and surveys. Now, when you ask them who is in the business of agriculture, they will tell you les agriculteurs du weekend. They are agriculturists of the weekend. Those are the people living in the cities. Some of them are, and mostly from the military, it's a doctor, it's a banking, and they're the one in. And surprisingly, they are changing completely the way we do business. Most of those guys, their parents, one generation, they are going back to the village there on top of their job and they're doing business agribusiness. So that, I think, social connection with the land where their parents come from is very important. And when you target them, they become the champions. Obviously, they have social connection in that village. They are the one also can change the cooperative, organize them, bring processes from their own job, which has nothing to do with agriculture, and improve it. So just to respond to that one, a concrete example for the second question. We are working in Africa on a program called Inclusive Green Finance called Agrifin, which is the Green Climate Fund. It is, in fact, the connection from the demand to the supply side for across many countries in Africa. And we are going from what the farmers need, technical assistance to know how to design a bankable project, which is green adaptation and so on, and the different access to take it to the bank from the first step up to the approval, up to the implementation, up to the moment where they harvest, make it like, profitable and they can pay back the loan. And from the banking side, the different barriers which themselves prevent them even to finance, which is like the risk. What do they need in terms of changing their process internally, in terms of technical assistant capacity, but also to understand the farmers. So in Cote d'Ivoire, one of the largest banks there, when we discuss with them, they say we finance major and big banks. So it's not a problem of money. But our problem is these people, we don't know them. If you come with this green finance facility and you take the risk, higher risk appetite, and then it pushes us to learn to work with them, tomorrow our money, we will put it in. But the first step, they don't want to do it with the money of those savers. They want to do it with development money, and later on they learn to set up the system to work. So, and we believe within 5-10 years, the green banking sector connecting to the farmers will thrive in the continent. Over.
Thank you, Pathé. We'll just take last two questions. Please let them just be questions. She had her hand up. Can we have the mic for her? And then, okay, we'll take the last 1, 2, 3. We'll take it at once, and then we'll have Adesua wrap up with the closing remarks.
Okay, thanks, the moderator and the panelists. I am Fatma Al-Hassan from Sudan, Food System National Convener. The problem in Sudan facing the youth is that most of the agricultural area is rain-fed. So even you count a number of countries that are facing climate change problems, Sudan is higher because 70% of agriculture is in rain-fed. And hopefully now there is a reverse migration from the capital to their original villages. They have the land, they have the water, they have all the resources, but only lacking is the finance. So now you count a number of financial institutions, and we want to know how we can be engaged in this, even lending institutions, because the resources are there. But the main problem is the finance and the infrastructure. Thank you.
Thank you so much. My name is Stephen Bazat and I'm from Movement Supply and Services Limited, located here in Rwanda. So everyone is talking about finance. That's a really big challenge. If there is something that is challenging right now is about finance, whereby even if you want to get a loan is about 18% of the interest rate. And now in agriculture, here we are talking the same language. When we are talking about the same language, by the way, for me, I have a suggestion before even we conclude. If Agra is a global in this situation, why can't we set up the Bank of Agriculture? So that if we understand this philosophy, we all know exactly how we can get the money and implement ourselves. If you're talking about this kind of the grants, they will be very small. Okay, you're constructing the warehouses for the storage. What are they going to keep? They will not store anything if you're not having the working capital. The bank is going to focus on the big project. The microfinance will focus on the pyramid, but there's nothing, the missing middle, which is the working capital. My colleague said 70% is lost in post-harvest handling. I think that's what you, if I would say. That's really true. If we talk about sustainability, then we have to talk about post-harvest handling. How many here are from Rwanda? I want to ask you a question in Kinyarwanda, maybe. Amata apfira mu icebe ry'inka cyangwa apfira mu cyansi? Apfira mu cyansi. Ni ukuvuga ayo amata apfira mu cyansi ni he? It's about post-harvest handling. Does the milk get spoiled from the udder of the cow or from the cup that you have put it there? That's why we say approximately 70% is lost in post-harvest loss. So if we are talking about finance, please, Bank of Agriculture should be opened up as soon as possible, unless we are out of this.
Thank you. The last question, and then we address this and close. We're already. The last question, the lady there.
Okay, thank you so much. My name is Rachel Abaisinga, and I work for Concern Worldwide, which is an international organization that strives to improve the livelihoods of the extreme poor in Africa and mainly in Asia also. So my question is very simple. It's good to know there are many opportunities available for the youth in Africa, but what are we doing to ensure that everyone is reached? I have heard us talking about inclusiveness, making sure that no one is really left behind, but albeit even this summit and other opportunities, there are many people who don't know about it. Like Dieudonné said, for him to start changing, it started by him getting information. So what are the platforms we are using to ensure that even those youth that are living in rural areas knows exactly about what we're doing? Because I like what Adeswa said, that we are trying to unlock the potential to transform the continent, not just creating jobs. So what are we doing to ensure that all potential, hidden potentials are reached? Thank you.
Thank you very much, our panelists. Anyone before Adesua then closes with her final remarks?
No, thanks. I will just jump on the banking because I like really banking. And you know, in many countries, we have agricultural banks. Many failed because of also management. They're set by governments, and maybe it was not done in the right way. They disappeared, they came back, and so on. And those banks, their interest rate is low, and sometimes the interest rate plus the period of repayment is extremely short. You know, you get the money, you have to pay back after the season, so you are not able to do the business. So those banks right now are recapitalized on, and then even private sector is in. So we have a problem also with the bank, which is one. Second is those banks have a lower interest rate than a commercial bank or microfinance institution. Here you were mentioning 18%. In Nigeria, I think it's almost 25%. And the highest interest rate in the world is in Madagascar. So if we look at the figure, it's 50 something. But the interest rate when you're a businessman is not an issue. If you know that you are getting 90% interest rate, but your business will give you something that allow you to pay back, and then you go beyond that 90%, it is a good deal. That's not the issue. The problem is you take an interest rate of 18% and you are not able to increase your yield and sell to pay back the 18%, then you are in default and you are in trouble. So I believe right now, what we should be working is to reduce the interest rate for smallholder farmers. So our narrative is some of them are not even in the market. So you need to bring them first in the market. That's the first ladder. And then now they can compete with those real interest rate. But there should be some interest rate incentive linked to those who are struggling 1, 2, 3 hectares to get there first. And aside those one, the infrastructure to help them now increase, so at least they can compete in the real market and borrow at those higher interest rate and start going to the commercial rather than or any kind of funds or banks. But those steps need to be done. They can't be the same interest rate for those who are the most vulnerable, most fragile in the system. So that was just a contribution.
Yeah, just quick one. We also need to address the financing for Sudan as well as we.
Yes.
her question.
I don't know if I have a blackout in my, but the question was just.
They have the infrastructure and resources. Financing is now the challenge for Sudan. Any feedback?
For financing, I think there are a rise of financiers, investors. You have projects that are set, like IFAD, we have investment programs there. And you have also private sector. I think even Badea is in Sudan, which is like the headquarter. Many other investment that are in there. Now, the key issue is how that investment will come to you as a smallholder farmer. So for those who are working in IFAD and maybe your organization, we are going on the field and meeting farmers. But when you meet young people and women, the first question is, yeah, it's a project. How do you finance me directly? We know, yeah, but you know it's a government project and all of that. So in many organizations now you have even the private sector like facility, which has nothing to do with the public sector. So again, to get to that financing, you need to design a funding proposal, submit it as a private institution, and then get it. But the issue is now who will support you if you are not able to know how to do it. Government are putting some institution to support individual private SMEs to design bankable project and submit it and get the funding. And I think in Sudan, if that piece is missing, it should be there. If not, like, development partners that are providing technical assistance for you as a private entity, individual, to go and submit, because those resources are there, but you need to do mathematics to know if this is a bankable one, will you get return on investment if you get the resources from a private sector, because they will get back to you to reimburse the loan. Over.
And I just wanted to also add that IFAD is doing such a great job around thinking about innovative ways to look at where we should put funding. But when we talk about the issues of climate and resilience and agriculture, the Sahel cannot be ignored. Sudan is one of the countries who are in the middle of one of the hottest part of the challenges at the forefront of addressing climate changes. And so I think that as we think about those solutions, we must also think about innovative financing that goes in there. But one of the critical aspects of financing is that we must de-risk agriculture, because the bankers have to make their income. If we are not thinking of innovative ways to de-risk agriculture, then finding opportunities in agriculture where you can actually pay 18% interest rate and still make a profit margin that takes you above that 18% in a sustainable way over time is a challenge. So as we look at the solutions to accessing finance and interest rates, the ability to de-risk like simple things like access to weather forecasts, then looking at issues about storage that addresses the wastage and the loss, post-harvest losses. If we have to innovatively address post-harvest losses, and we in HEFA are doing a lot of projects in that area and trying to find other partners that are, so that we can partner with you. But we see at the front end that a sustainable way to address the interest rate challenge is to support to de-risk farmers. HEFA also has a organization that we call the HEFA Impact Capital. And one of the things that Impact Capital team do is look at how to take up first loss guarantees. I think that creating these innovative ways to support and understand the importance of de-risking is critical, even as we put out those financial instruments in the market.
There was maybe one last instrument which I want to highlight here, because we're talking about people who need really to work with others. It's equity. In Africa, we used to use debt as the unique instrument and grant to solve the problem. But equity is coming in. And I think equity for many, private farmers, private sector, if you're an individual and don't have the capacity, you need to build those joint ventures. Let in others who are strong to be with you, train you, support you. In 5-10 years, you have the capacity and they're out. And when they're out, you can run by yourself. And the equity instrument has to be more promoted, and also for young people to start thinking about it. It's not just, this is my business and you are struggling, but it's your business. But create the partnership with those that have the know-how, but also the financing to support you try.
Thank you. Our time has been fast spent. I'm going to let us wrap this up. Adesua, I'll be calling on you for the closing remarks. As you do so, I'd like you to address the last question on how are we getting the information out on all that is happening, how we're getting the information to young people in urban, peri-urban, rural areas so that everyone has access to all this great information. So Adiswa, your closing remarks. Let me use this opportunity on behalf of IFAD and HEFER and on behalf of AGRF for pulling this panel together to thank you all also for being here today. I think that it's a very interesting combination that HEFA and IFAD have decided to put together in this panel, looking at climate change and its challenges, but also looking at that in the context of the youth in Africa and the role that they will play in the transformation of the continent's agriculture. I think that as we think about those issues, understanding the importance and the critical role that data will play and technology will play, as well as access to innovative finance, is key. And we think that from what everyone on the panel has talked about today, the sustainability and the future of the continent lies in our ability to attract more of our young people back to either the rural community or to farming in the urban community. But we also see those opportunities as also creating attractive tech-driven jobs across the value chain, all the way from farm to market. We believe that the future of Africa's agriculture should look like a landscape where a young person could be working in a drone manufacturing company and still working in the agricultural sector, working in high big data aggregation company and still working in the agricultural sector, or working in climate smart agriculture, or working in issues that have to do with the environment. We see opportunities that can aggregate, and of course the challenge here in this conversation is where are the critical touch points. Lots of projects have been talked about today and investment opportunities that IFAD has done over the years. What we've also done in HEFA as a development organization, without a deep pause like organizations like USAID and IFAD is beginning to think differently about the grant funding that we have available to us. Trying to see how we understand that innovation has to happen at all levels, but also at the finances side as well. We also believe that the conversation to address the climate sustainably is an integrated conversation that includes many critical stakeholders who work across finance, who work across youth and development, who work across access to data and access to innovative solutions. But what is important is as we build farmer resilience, we must understand that that's the best way we can actually be able to address these issues across board. We want to thank you all for coming. We look forward to continued conversations, continued platforms for collaboration, thinking out of the box and creating the change we want to see. I will end by saying this. If we can reflect on all the challenges that have happened in the world in the last 20 years. I was taking a ride with my son just yesterday, and we were talking to him about the fact that when there were no mobile phones, you have to go out, and when you get back, you'll find out if somebody is calling you. And he said, well, how do you do it? You wouldn't be able to call someone when you're on the road. I said, of course you wouldn't. There are no mobile phones. The world has so changed that people cannot fathom how we ever lived without the mobile phone. In the next 10 years, Africa will also be transforming. We have to understand that, to take away the limitations of how we practice change and transformation yesterday, to release ourselves to innovate to how the world will operate tomorrow. And I think that being able to be in that headspace where we are imagining the future from future backwards, not from today into the future, is really how we can transform in this sector. So thank you all very much. Glad to have you all here, and I do hope that it was a useful session for everyone.
Thank you to all our dynamic panelists and everybody in the room. We hope this has been an inspiring session for everyone. We look forward to continuing the conversation, and we wish you a fruitful session at the rest of all that AGRF has for us this week. Thank you very much, and have a nice day.
Thank you to the moderator.
I think the panelists will take a picture.